Great set of numbers. Well done on the buyback. You're ticking all the boxes for the market. You're paying out more than any European or US bank, but you call it, I think Mr. Gulliver says it's not a progressive dividend, but it is generous. So is it buybacks over dividends, Iain? Good morning.
Good morning. Yeah, we're very happy with the first half of 2017's performance. We've got revenues heading in the right direction across all our major businesses and regions. Good credit control and good cost control. So in a very strong capital position, and as you mentioned, another $2 billion worth of buyback we're announcing today, which over the last 12-15 months will make about $5.5 billion buyback in total. And that, of course, is further support to the 51 cents per share dividend that we paid out last year and that we certainly expect to pay out this year as well.
Iain, you talk about Asia, 63% of your profitability, and Mr. Gulliver's talking about the opportunities that you see there. How strong is China? That's what the world is trying to debate. Give me your inside take.
Look, we continue to see good progress in our mainland China business in the first half of the year. I think one of the outstanding features for us was gaining approval for what will be called HSBC Qinghai Securities, which will be the first foreign bank majority-owned securities company in mainland China. That for us is a huge strategic step in helping us connect for international customers to the securities markets in China. Its approval will get that venture up and running hopefully at the end of the year and then build from there. But certainly in terms of our core banking across retail banking, commercial and our global banking and markets business, we continue to see progress coming through mainland China in the first half of the year. So growth continues to be pretty encouraging in that area, and clearly we maintain a very strong focus on prudent underwriting and risk management in that marketplace.
Iain, do you think that the capital flight story is done and dusted and the wealth management adjustment has been handled well? Have we passed the worst of the potential storms in China?
Well, I think that's an impossible question to answer. I think a great deal depends on how central monetary policy is managed, and that varies from time to time, as you see in any government. I think the regulatory authorities in China make sure they've got the right controls in place and try to enforce them to the extent possible. And I think our role as an international bank is to ensure that we support those efforts.
I'm just looking at some of the numbers. I mean, you really are pulling it out of the bag in terms of the European growth story as well. That momentum, give me some complexion. I mean, your profitability in Europe is also quite outstanding in this quarter. Give me a sense of the European recovery story for you.
Yeah, I think we had two of our businesses that had outstanding first halves and second quarters. Global banking and markets continued to perform very strongly with good revenue progression coming through our equities business, coming through our global liquidity and cash management, coming through the global banking business as we continue to support our large multinational trading corporates and financial institutions. Retail bank wealth management also had a good quarter, moving forward with some growth in the mortgage business within the United Kingdom. But more broadly across Europe, we're seeing each of our main businesses continuing to develop nicely. I wouldn't quite call it a raging recovery at this point, but it's certainly encouraging progress compared to most recent history.
Well, Iain, one thing which is raising is the news belt on geopolitics. We wake up this morning, more concerns in North Korea, more concerns in regards to US-Russian relations. Iain, when you travel around the world and you talk to the financial elite, what do they talk about the consideration in terms of geopolitics? Are they concerned about Trump? Does that stop them from making decisions in the US side?
Look, I think it brings uncertainty to decision-making framework for any business really anywhere in the world at this point in time. Our focus is very much on trying to provide some insights about how that impacts market opportunity for our customers around the world and then providing the support that they need. But there's absolutely no doubt at this time that the geopolitical uncertainty, whether within the European environment, certainly informed to some degree by Brexit, and further afield, informs decision-making at a business level. That being said, we've seen good progress really across the broad base of our markets, whether it's within the Americas, the European environment, Middle East and Asian, as our numbers bear out. But I think this is just simply a feature of how we adapt to and support our customers on an ongoing basis.
And part of that adaptation is adapting to a new rate environment. There's been a shift in rhetoric, tone and intonation, the Fed, the ECB, etc. Let's just drill into the Fed a little bit. Do they have the ability to deliver on the dots that they've intimated for next year? Do you expect a continuation in higher rates through 2018?
Look, certainly we've been very pleasantly surprised by the way that the Federal Reserve has moved rates forward this year. Moving into the latter part of the year, reeling back quantitative easing is probably the thing that we expect to see happening in the second half or the fourth quarter of the year. Another rate increase from our perspective would always be welcome. We carry a surplus deposit base of some $400 billion US dollars, not all denominated in dollars, but Fed rate movement clearly helps earnings of HSBC. So what has happened thus far in 2017 has been very supportive, certainly for our operations, and to the extent the Federal Reserve can continue to move that forward, as they've done with great confidence so far this year, would certainly be encouraging, I think.
Ian, as you read about balance sheet normalization in the United States of America, are we underestimating or underassuming or underknowledged on the risks of balance sheet reduction in the United States of America?
Look, I think, as central banks revisit quantitative easing and think about tailing that back and reducing their purchases in the market, that is a significant challenge for central bankers around the world. And how exactly that might impact the economies for which they have oversight is still fairly unknown. We're certainly navigating in relatively unknown waters here. So it's going to be very interesting to see, initially at least expected, in terms of how the Federal Reserve moves forward. And then it will be even more interesting to see whether Mr. Draghi and the ECB follows in their heels. But I think we're in pretty much uncharted waters at this point in terms of the knock-on effect to the economy as that unwinding of quantitative easing gets underway.
Ian, a couple of final questions on Brexit. Your CEO, Mr. Gulliver, of course, says it would be irrational to look at any other location apart from Paris for you for a whole load of logistical reasons, which I get and I understand. I'm just curious, as I see Nomura, Morgan Stanley, Citigroup and a number of others head to Frankfurt, I just wonder, is there a risk that you're not with a new ecosystem could evolve in a post-Brexit world?
Look, we have a strong universal banking business based in Paris with all of the capabilities of our bank in the United Kingdom and our banks around the world. It's a natural platform for us to transition any activities that may need to transition to the European supervisory framework in a post-Brexit world. It would be very, very odd for us to consider a country or a jurisdiction other than France for us to set up our post-Brexit operations. For us, the transition represents no more than possibly the move of up to 1,000 employees from our UK banking operations. And within the UK, we employ 42,000 employees. So transitioning 1,000 employees, up to 1,000 employees, to Paris to support our customers through each of global banking markets and commercial banking is a very natural move for us. All those licenses and capabilities and technology and risk management capability are already present. So it is no doubt for HSBC the most efficient approach to adopt.
John Cryan last week said, look, the plumbing of the world's finance is in London, and it's a darned hard thing to get the whole thing to move. Would you concur with that? There is a lofty challenge to moving the plumbing.
I think John is exactly right. London is the foremost financial centre of the world. To at the drop of a hat, try to recreate that really anywhere outside London with the capacity to serve, if only from a volume perspective, and manage the complexity around that, will be a massive undertaking that, if it were to happen, I believe would have to transition over a number of years. But our view is that London will continue to be an important financial centre in a post-Brexit world, and clearly, we at HSBC view it as part of our role to try and lead in that regard.
Ian, this is a global show. We're live in Dubai, we're live in Hong Kong, we're live in London this morning with you. The plans for the Middle East, are you pitching in there on the IPO for Aramco? What plans do you have for the Middle East? 2 for 1.
Look, our Middle Eastern and North African business has performed really well through the first half of the year. We clearly like to participate in major transactions within that region. We've got a team that has all the capabilities to do so. I think it goes without saying that some of these transactions tend to be confidential in how much one can say about them. But look, we have a very strong presence in Dubai and across the region, and we take that presence to support our customers and participate as fully in the market. So we've got a pretty optimistic outlook, and that's certainly informed by a very strong performance in the last few years by our Middle East North African business, and that has continued in the first half of 2017.